Hey there, welcome to Neppy Invest. An absolutely fascinating day on the Australian stock market on February 1st, 2021. We saw a real wild intraday swing in the stock markets, down massively red at one point, and then by the end of the day, it was up green by a fairly large amount. We saw the similar sort of thing in March and April of this year. We saw massive intraday swings. And I think it all comes back to the one thing. I'll get into the reason why I think it happened yesterday, but let's get into the first hour of trading. So what I've got here is trading on the XJO in the first hour. So we do have a little bit of selling in the first 20 minutes of the opening of the market. So if you don't know by now, there is an ordered opening to the market. Not all companies open at the exactly same time. There's a sort of a staggered opening. So companies that begin with A, B, C, they open about 10 a.m. Companies that begin later in the alphabet, they open about 8 to 10 minutes later. So we saw quite a bit of selling in the first 20 minutes. I think there could have been some profit taking. Maybe there was a bit of nervousness within the market itself. And we saw the low point in the day reached at 10:20 a.m. and then again around 11 a.m. at 65.20. So overall in the first hour, the market was down at its worst about 1.4%. Then what happened after 11 a.m.? So after 11 a.m., the share market just kept on rising and rising and rising. So overall, it was up 0.8% for the day. But if you take it from the low point in the day, which was at 11 a.m., to the close of trading at 4 p.m., the market was up 2.2%. So some quite wild swings in the day, but this is quite reminiscent of what we saw in March and April of this year. And the thing that drove our market higher on February the 1st was the same thing that drove our markets wild on those days. And I'll get into that in a second. But what could cause these intraday swings? Typically in the past, it was probably more than likely going to be some positive economic news. But before we actually opened the day, and this could have been reason why our market opened weakly, we did get some weak Chinese manufacturing numbers. The PMI was down to 51.3, which is still positive or still expansionary, but it's actually down to its lowest level for quite a while. So the manufacturing in China is not growing as strongly. It has been growing. So I think that could have led to some weakness in our stock market in the first hour. But there was something way more powerful driving our stock market forward from 11 a.m. to the close of trading. So what could that be? And the simplest answer is it was the USA futures. That's the only thing that was driving our stock market forward. So I've seen this during this year, particularly during the COVID-19 financial panic. Our stock market was heavily correlated to the USA futures. We were sort of in a way leading the American markets, which were going to open later in the day, our time, so around 11 p.m. or so. So actually, we were leading based off the USA futures. So we were sort of trying to figure out what the USA markets were going to do overnight, and then that's how we were trading, that's how we were moving, and that's exactly what happened on February the 1st. That's what drove our wild intraday swing. And do you want proof? So what I've done here is just overlay the XJO and the S&P 500 futures. This is roughly the same time period during our trading yesterday. And you can see how well they correlate. So initially our market was down as the S&P futures were going down. And I think when you add the fact that we did have some weak Chinese manufacturing data, that just added together our market being down 1.4%. But around just before 11 a.m., the S&P 500 futures started to turn, and they just kept on rising all the way through our trading day. And by the end of the trading day, that's the reason why our market was up, and the futures were anticipating that the American markets were going to be up on the overnight period, or our overnight period, and that's exactly what happened. So what I found in the past is our markets have followed what the overnight markets did on the next day, but now we're trying to sort of anticipate what the American markets are going to do on the following trading night. And how we're doing that is by looking at the American futures. So we are now more highly correlated to the American futures than the actual American markets And I think in a way we are leading the American markets just based off what's happening with their futures. So that's a funny way to look at it, that in the past we followed the American markets. Now we're sort of in a way leading the American markets. So that's all I've got on this, the reasoning behind the wild intraday ASX market swings we saw on February 1st. If you have any questions, leave in the comment section. I can't guarantee I'll get to them fairly quickly. I'm getting a lot of comments and I don't have enough time to answer every single comment. I'm trying to do it, but as my subscriber base increases, I get more and more comments. So just be patient with me if you do have a question. And otherwise, I'm not a financial advisor, so even though I'm not really giving any advice in this video, I still probably should say, just out of habit, if you do need to seek any financial advice for your own circumstances, make sure you seek out someone who is qualified. That's all for this video. Have a good day. Bye.